CCFS 2026 Companies Compliance Facilitation Scheme. MCA issued General Circular number 1 of 2026 dated 24th February 2026 introducing the Companies Compliance Facilitation Scheme CCFS 2026. The major objective of this scheme is to provide one-time opportunity for companies that have defaulted in filing statutory documents with the register of companies. We can see here many companies across India have accumulated a large additional fees due to non-filing of annual returns and financial statements. In some cases, the additional fee has to be extremely high because it is calculated at 100 rupees per day. To address this issue and encourage voluntary compliance, MCA introduced this temporary relief scheme. Duration of this scheme, the scheme is valid only for a limited period of 3 months. Starting from 15th April 2026, end date 15th July 2026. Here is mentioned. All pending filings must be completed within this period to avail the benefits of this scheme. After this closing date, the normal late fee provision under Companies Act 2013 will apply again. The main benefit provided under scheme, additional fee reduction of additional fee, normally 100 rupees per day. Under this scheme, you must pay general fee plus only 10% of the applicable additional fee. Advantage, reduction of additional fee. So 10% of the applicable additional fee. This is a very effective, means 90% waiver in additional fee. This relief is particularly useful for the companies that have several years pending filings. Type of forms covered under the scheme, if you see here, AOC 4, MGT 7, MGT 7A, auditor appointment, ADT 1, other compliance filings, you can see forms related to 1956 Act, 20B, 21A, Form 23AC, Form 23 ACA, 23 ACA XBRL, 23 ACA XBRL, Form 66 and Form 23B. Other compliance filings. So Companies Act 1956 related forms. So we have clearly explained the forms, and a special relief for inactive companies also provided here. The companies not actively conducting business but remain registered. Such companies can use the scheme to convert themselves into dormant companies. Section 450Y. 50% of the normal filing fee is payable. So dormant status helps the companies to maintain registration while reducing compliance requirements. Another advantage, option to close defunct companies. So the companies that are no longer operational can also take advantage of this scheme. They can apply for strike off of the company name under Section 248 of the Companies Act. STK2 form. Only 25% of the normal filing fee is needed to be paid. So normal fee is 10,000. So with this only 2,500. This encourages promoters to legally close the inactive companies instead of keeping them as a non-compliant. So the procedure to avail the scheme is no separate application form is required. Companies need to identify all pending statutory compliance, prepare financial statement and annual returns for the missing years, upload the relevant forms on the MCA portal, pay the reduced filing fee automatically calculated on the system. So once the forms are successfully filed within the scheme period, the benefit reduced additional fee is automatically applied. There are certain companies which are not eligible. This is what mentioned here. So generally include vanishing companies, companies already under strike-off process, companies that have already applied for closure before the scheme started, companies against which action of a final notice of striking off under Section 248 of the Companies Act has already been initiated by the registrar, not eligible. Companies which have filed application for striking off their name from the register of companies, companies which have filed for obtaining dormant status under 455 of the Companies Act before inception of this scheme, companies which have been dissolved pursuant to a scheme of amalgamation, vanishing companies. So, not eligible for the scheme. Here, the importance of the scheme for the companies, the benefits, avoiding extremely high late filing fees, updating statutory records with the MCA, preventing regulatory action by ROC, maintaining director compliance status, improving corporate governance. So the companies that have several years pending filing should immediately review their compliance status and use the scheme before it expires. So this is a opportunity to assist the companies in regularizing long pending statutory filings, bringing them back into the compliance framework. So finally, we can say the company's compliance facilitation scheme 2026 is a valuable one-time opportunity provided by the MCA for companies to clear their pending filings with the substantial relief in additional fees. Companies should review their compliance position immediately and utilize the scheme before a deadline. We have two channels, RR Corporates, other channel, RR Legal Talks. Please do subscribe, hit the bell icon so that you will not miss my latest videos. Thank you.